Hello everyone, this is the pre-market report video for today June 6th in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday in the pre-market video, we discussed that this mixed jobs report made the whole global momentum very positive. And as a part of that, it again turned the Fed tool probability table. I hope the regular viewers of this channel might remember this. Last week, it was near 70% probability that Fed will increase 25 basis point of interest rate in the upcoming FOMC meeting next week. Now, last night and also during the weekend, that table now turned again. At present, 75% market confident that Fed will not increase any interest rate in the upcoming FOMC meeting. 75% all the investors expecting the Fed will pause the interest rate, which is very good. Thus, S&P 500 opened flat and immediately it increased marginal. And around that time, 10 a.m. Eastern Time, the Institute of Supply Management released the non-manufacturing PMI data for the May month, which came as 50.3 against expectation of 51.8. Which means on the May month, the service sector in US didn't grow as expected. Otherwise, we can call it as a very poor expansion. So this is exactly what market wants. Poor service growth will directly control the inflation. So it increases the further optimism that Fed will pause the interest rate next week. Basically, it increased the positivity in the US market and pushed the S&P 500 to near psychological mark 4,300. Thus, it started to trigger the profit booking. In addition, this bad service sector affected all the retail sector stocks. For example, Nike, Salesforce and Home Depot dropped from 1 to 2.5%. All these three were index heavyweight in Dow Jones. And around 2:30 p.m. Eastern Time, SEC, India's SEBI equivalent in US, filed a lawsuit against the world's largest crypto exchange platform, Binance, and its founder for breaching the securities law violations. Exactly similar charges like on FTX. This immediately pushed down all the crypto. For example, here have a look at Bitcoin. It just sudden drop and it did affect all the index as well, including S&P 500. Thus, in the end, Dow Jones lost 0.59%, S&P 500 down by 0.2% and Nasdaq was almost flat. Regarding VIX, it too marginally increased 14.73. But there is one positive news last night. During the Indian market hours, oil price increased nearly 2%, but when the US market opens due to the recession fear, it erased its early 2% gain. And at the time of this video, WTI crude oil was trading near same as Friday's $72 per barrel and Brent crude oil was trading near $76.5 per barrel. Regarding Indian ADR, again, this bad US service PMI data directly affects our IT stocks. For example, in Indian market, Infosys closed positive of 0.5%. However, in ADR, it dropped over 2.5%. Similar case for Wipro as well. Anyway, banks too dropped but not as much as IT stocks. About SGX Nifty, it too dropped below 18,700 mark and equating that to our spot market, kind of indicating flat to 10 points gap down opening. Before moving into the next topic, I like to highlight one thing. During the European market hour, Europe's statistical office released the Europe Producer Price Index. Wholesale inflation data. For May month, it came as only just 1%. In comparison to the last December month, it was near 25%. So, this is the huge reduction. Even the expectation itself for May month was around 6%, but the data came as just 1%. I always say wholesale inflation will dictate the future consumer inflation. Now, this 1% means Europe don't have any more inflation problem at all. This data is unbelievably positive for Europe. So, as of today, from this data, the future of Europe appears good compared to US. So, that's all about the global market. Now, let's see the India-specific information. Yesterday, India's service PMI data came as 61.2 against expectation of 57. It is the longest stretch of expansion since the inception in 2012, 22nd straight month. This PMI data was very good and it also kind of supported our market. Theoretically, it's very good for FMCG and consumer stocks. However, yesterday, Weather Department announced that there will be a delay in monsoon by 2 to 3 days. This killed the optimism in the FMCG. But I like to inform you guys, so at least we can keep track of how much the Indian service sector is expanding. Anyway, moving on. Yesterday, Adani Group announced that they fully repaid the loan of over $2 billion now that was linked with shares margin. I consider this as positive. Let's see how market is reacting to it. In terms of institutional activity, for third consecutive day, FII were net sellers and DAI was a net buyer. FII net sold for approximately 700 crore rupees, which is very marginal increase compared to last Friday, whereas DAI net bought for around 1200 crore rupees. And finally, the trade volumes were back to normal. As a summary, global momentum is not that bad, but our IT stocks looks bad. I might say the last 1 hour selling in US market was just knee-jerk reaction due to SEC lawsuit. SGX Nifty is indicating a flat opening. However, because of this oil price drop, Reliance also might come under pressure today. About the things to look out, during our market hours, first around 2 pm, UK's construction PMI data and at 2:30 pm, Europe's retail sales data is scheduled to release. I believe the retail sales data is very important. I mean, in the last 9 months, it continuously contracting. Now, if it improves means, especially with yesterday's very low PPI data, this can turn the negative to positive if the market was in the negative region. Finally, in the aftermarket hours, US EIA scheduled to release the short-term oil outlook. These are the some items we need to keep an eye out today. Coming to technical, Nifty opened with a gap up and traded within the narrow range of 18,585 to 18,640 throughout the day. Thus, it forms the very short, small-bodied bearish red candle with relatively long upper and short lower shadow. The formation of a small candle suggests that indecisiveness between buyers and sellers. Basically, Nifty experienced a relatively stable trading session. However, it managed to break out of its consolidation phase, indicating a potential shift in the market direction. Overall, as long as Nifty is trading above 18,550, the positive sentiment is likely to continue. It could rally till 18,650 to 18,700. On the flip side, below 18,550, the selling pressure is likely to accelerate and Nifty could slip till 18,500 to 18,450. Then, in case of Bank Nifty, it had been struggling to cross and sustain above 44,160 levels. I mean, yesterday, again it closed below its previous breakout area of 44,160 level for the third consecutive day with a weakness seen in HDFC Bank. Thus, it is expected to trade in a range with 21-day exponential moving average at 43,700 providing strong support and 44,200 remaining as an immediate hurdle. Then, from options engine open interest, there was a significant number of call options unwound at 18,500 and 18,550 and 18,600 got the new maximum nearby put options added without no new call options. However, because of the call option unwinding, 18,500 to 18,550 is the immediate support and if it breaks, then 18,400 is the strong support. Then, regarding overall options open interest data, 18,600 got the significant short straddle and the next maximum nearby call option open interest is at 18,700 and followed by 18,800. Thus, 18,700 is the immediate resistance and 18,800 is the significant hurdle. Then, coming to Bank Nifty, based on overall options open interest data, the maximum nearby call option open interest with less short straddle is at 44,500. So, 44,500 is the resistance to break and the maximum put option open interest with less call option open interest is at 43,500. Thus, 43,500 is the support to look out for. Which means on the May month, the service sector in US didn't grow as expected. Otherwise, we can call it as a very poor expansion. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.